What's up, everyone? All right, so I'm going to give you my recap here for today. Finishing the day up $106.34. Not a very big green day. Not a lot of action today. Well, the focus today continued to be on everything going on in the banking sector with these same stocks from last week, FRC, and earlier this week, FRC, WAL. I saw WAL had a investment from Citadel, 5%. I thought that was interesting. Made me think maybe that one's possibly a little safer to trade. But FRC, higher priced, bigger spreads, very risky, halts up, halts down. PACW, I took one trade on it, a 4-second long trade. That was when WAL and FRC had just squeezed into a halt, and I thought that PACW was going to follow suit, so I got in it as it was squeezing up right here. But you know, my feeling remains the same, that the risk to reward ratio is not good on these because I'm concerned about the risk of one of these getting halted. And hopefully that doesn't happen, but it did happen on SIVB. It could happen, and if it did happen and I had the misfortune of being in with a 2 or 3 or 4,000 share position when that happened, I could potentially lose that entire position. Gone. That's what would have happened on SIVB. You know, 2,000 shares at 39 is $80,000 gone. So I really don't want to take $80,000 losses, and I can mitigate that risk by avoiding these types of stocks, or if I trade them, trading them with significantly smaller size. But even if I trade them with smaller size, how much am I going to make? 200 bucks, like I made on this trade? You know, 200 bucks, it still carries risk. So I did mitigate that risk with a very short hold time, but I still felt like it was risky, and I just don't think that it's worth pushing my luck. So right now is a time where we've got this market-wide volatility in the banking sector, and primarily on mid and large cap stocks, and that's not really my wheelhouse where I usually trade well. So the result for me right now is that the best bet really is just to sit tight and wait until there's more setups that fall into my wheelhouse. Now, EUDA was a valid stock, but I went down 800 on it. First trade was long pre-market at, when was it? Right here, about 295. Drops down, take an $800 loss on that. Got back in at the open when it broke through 3. Made back roughly 700 or so in these trades. And then look at this false breakout right here. Dramatic false breakout. This was just a stock that just keeps rejecting this level right here around, I don't know, 340. So anyways, that was a choppy stock. And then we had a little bit of momentum on PXMD. It's a little cheaper. I left it alone. AIMD, this one, very thickly traded. Not very clean. No trades on that one for me. So anyways, that's kind of the long and the short of it. There really wasn't a lot that I could sink my teeth in today, and feel good about. FRC, yeah, in hindsight, since it didn't halt, I could have traded it over the last 3 days and probably had some good trades on it. But if at any time it had gotten halted, and God forbid I was holding, a 3 or 5 or 10,000 share position, it's a 6-figure loss, and I don't want that. So if you can't handle the risk, don't take the trade. And I had to think risk first, which is that's absolutely the right attitude. But I am living with a little bit of the disappointment of missing those opportunities, but it's better than living with the regret of having made a terrible mistake and being down, over $100,000 this week. So again, just trying to be thoughtful of risk, because as we all know, trading is risky. And of course, my results aren't typical, but one of the ways that I've been able to maintain consistency is by knowing when I really just have to sit on my hands. And as much as I want to trade something, the safe thing is just to sit tight. So that helps me dodge maybe some of these bullets that others may have caught, unfortunately. But SIVB, I'm sure there's people, active retail traders who are stuck in it, and they're not going to be able to, their accounts could be liquidated or frozen, or depending on how much SIVB, how much buying power they had. So it's just not worth it, right? This is a marathon, it's not a sprint. There's no reason to blow out on some high risk trade. Just not worth it. So Anyways, that's it for me. 10 past 10, short recap, not much to cover, but a small green day. Well, it's going to be actually probably a red day after fees and commissions, I would guess. But in any case, it doesn't matter. It's a small day. And I'll be back at it tomorrow. Maybe we'll see a little bit. If the banks kind of start to, I don't know, just as long as we don't have more bank failures. If these bank stocks just kind of start to fall to the back, periphery a little bit, then I think we'll see sort of a return to the more typical momentum trading that we're accustomed to. So I think it's just going to be maybe a couple more days of this, unless one of these fail or there are more failures, in which case there will be more volatility and these will continue to be a distraction. But in any case, this is a window of time, and it will close. And when it does, we'll go back to the more normal style of momentum that I've been trading for more than 10 years. So this is just a period to kind of get through in one piece. All right, so that's it for me. Reminder as always, trading's risky. My results aren't typical. Take it slow, practice as simulator, and we'll be back at it first thing tomorrow morning. Hopefully I'll see you guys in the chat room. If you haven't come over and checked out Warrior Trading, come on over and check it out. We've also got a coupon code right now, Clover40, 40% off memberships for St. Patrick's Day. All right, see you guys in class.